Hey everyone, it's Arash from privateplacements.com, where our goal is to connect you, the investor, with opportunities. With me today is Chris Marcus, founder of Arcadia Economics and the author of the soon-to-be released book, The Big Silver Short. This episode is going to be all about silver. Silver's been rallying the last 10 days to 2 weeks. There's a lot to unpack here, but there's really two main broad topics that we want to discuss with Chris. One of them is why invest in silver? What's the investment thesis? And the second one, how to invest in silver. Chris, thanks for joining us.
Rash, it's a pleasure to be here. I've enjoyed seeing your show quite a bit lately, and it's fun to be on here and talk some silver. Certainly an interesting time for sure.
Yes, it's good to have you here. And I think the timing of it is perfect. Before we get into the why and how, give us a brief version of the story on how you got started on this path and what got you interested in silver in the first place.
Sure, and I think that's a good place to start because it wasn't like I grew up with a silver bar in my crib or have some weird attachment to silver, but rather I graduated Wharton's MBA, I'd done an internship at Merrill Lynch, was trading equity options, and when the whole subprime bubble collapses, I've just been listening to Bernanke and Paulson saying it was contained. Yet, as I read about the investors who had seen it in advance, so they were all talking about gold and silver. They were all talking about the Federal Reserve policy. So it was the first time in my career where things actually finally made sense, because I think a lot of what Wall Street propagates is saying 2 + 2 = 5. And people have always felt there's something that doesn't make sense here. We're just spending money, printing it. And so I very quickly got into gold back in 2009. And then as soon as you get into gold, and especially when you watch the money that's spent by government, and not just in the US, but around the globe, and then you see the money printing. Once I became comfortable with gold, certainly when I found out about this thing called silver, any fundamental factor or research factor that I've ever seen, if you're buying gold because you think these governments and banks are going to melt down the currencies or the system, in that environment, if you think gold's going to go up, it's almost hard to see how silver doesn't go up more. Of course, keep in mind the other hand, if gold's going down, then traditionally silver will go down more. So there is the downside, but especially fast forward to today in 2020, where the Fed's already doing unlimited QE, and apparently that's not enough. Now they need aggressive action. Certainly, I would say, folks, would be a good time to be looking at silver and silver-related assets.
Chris, can we go back here and this idea of silver trailing gold? Can you explain why that is? They're both precious metals, but what's the difference? Why is gold always ahead and then silver trails?
That's a good question. I'm going to guess at the answer here. I don't know. Although one thing I'd point out, I know that's generally the way things have happened. Although, again, having a trading background, to me, it was always useful to keep in mind that, okay, maybe it happened the last 5 times that way. It could happen the next time, but that doesn't necessarily mean that. Although so far it does seem to be happening where gold close to 1750, so not far off from that all-time $1,900 high, whereas silver, not only is it a third of its 2011 high, silver is a third of its 1980 high, decades before we even knew about things like quantitative easing. So my guess is that the majority of the world doesn't know all that much about gold or silver, and gold a little bit easier to understand, silver a smaller market, less talked about, and requires a little more research, where you're going on Wall Street or talking to some of these banks, I mean, you're not going to hear about gold and silver. And like a lot of the small markets, similar to how, you have the major mining stocks, and then there's these junior miners, a lot of whom people don't even know they exist. Yet I think for folks that still want to trade in an environment where, hey, if I do my homework and I do my research, I can find opportunities because other people aren't looking at it. Just like the junior mining stocks, I think silver, when you really understand it, with the caveat that if you structure your risks appropriately, there's a reason why people lose a lot of money in silver. And certainly if you're looking to make a profit over the next quarter or the next month, I would not tell anybody to invest in silver with that approach. But certainly for folks that are able to have a longer term time horizon, maybe a way of thinking about it is if you're seeing the money printing and US government does this, Congress does that, and you're thinking there's no company that would ever be successful if it was run this way. To me, buying silver, it's almost like an inverse way of shorting government, because whenever the rest of the world realizes what I think most of the people watching this already know, if there's a way silver isn't substantially higher, I cannot figure it out.
Well, let's talk about that. And this is the why invest in silver, the fundamental, the investment thesis of why silver, why now?
Well, the timing is great now because you saw what happened with Corona. There's the first stimulus package, and now they're talking about a second one. The Fed, I don't think it's going to be, in fact, I'm careful about any sort of guarantee in the financial market, but I will guarantee today you will never see under this economic system the Fed raise rates. They can't. You can't have Paul Volcker raise rates. It collapses the thing. So we saw that at the end of 2018. So the Fed can talk about whatever it wants, but there's going to be more money coming and more money after that. And they are not going to undo this money. So, what are the traditional hedges? Gold and silver. And I guess perhaps what I think is at the heart of the issue, why I did a book about silver and what really set me on this path for the last decade was in 2011, you had QE2. You had the US get downgraded. You had the debt ceiling debate. Somebody even recognized there was a debt ceiling, at least tried to say maybe just raising it each time isn't a good long-term strategy. And silver was rallying, hit $49, and then on a Sunday night, it got torched about $6 and has never recovered since then, despite more money printing, more debt, more government waste. And that always stood out to me because I didn't understand that. Again, I had a trading background. I was running an options post on the New York Stock Exchange at the time. And I started learning about how this is traded in paper. So to me, here's the key question. Natural demand was driving silver to 49. And the only reason it came down, which you can see on, there's plenty of examples where large amounts of paper are dumped. So people, when it's trading in paper, you can say, I'll buy 1,000 contracts, sold. I'll buy 10,000, sold. The banks, essentially, and what the book covers, numbers I've come back with, and this is from talking with experts around the world in the book and on my show, I haven't found anyone yet who says there's less than 500 people who think they own each physical ounce of silver. Which, if that sounds a little bit like what happened at the end of It's a Wonderful Life, so you have all the fundamental factors, the money printing, and I know people are saying, well, they've been doing that all along. Why'd the price go down so much over these last couple of years? We've had several instances where you see demand exploding, like these past couple months. Supply goes down, and yet the price goes down, and I'm thinking, what other market operates like that? And I think a lot of people have been confused about that, but the evidence is there. I even interviewed Bart Chilton, the former CFTC commissioner, who was presiding over their agency's investigation into silver manipulation. And I'm not making this stuff up. The guy flat out told me that he thought, and he describes in detail that when Bear Stearns failed, they had a large position combined with JP Morgan's. It was over the position limit. He gave them a temporary waiver. Yet in 2008, everyone talks about gold going from 1,000 to 700, silver going from 21 to 9, saying that was panic selling. I'd personally dispute that because you see those prices plummet within days of that takeover. And then Bart Chilton says, I told him to make the position smaller. They came back a couple months later, they made it even larger. And we see silver fall from 21 to 9 while the Fed's cutting interest rates, banks are failing. This is all throughout as Lehman's failing. And the smoking gun to me is that you actually had a physical silver shortage. So the price is dropping, people are buying silver, yet silver dealers, some of them thought they were going to go out of business because they couldn't source product. So if someone thinks that JP Morgan, or we'll leave aside the individual names, but that the paper contract positioning is not impacting the price, to me, the evidence is there, and you can see it play out. You don't have to take any, in my opinion, JP Morgan last year charged with the RICO statute. So, I mean, that's the thing, is that people wonder, you know, and I get it, there's that frustration of waiting. Yet you have a situation where there's going to be some break point where people say, all right, I want physical delivery. There's a lot of evidence, if you follow the game of musical chairs between the LBMA and the COMEX, that is happening now. And in the past month, I've found it interesting, as I've brought different guests on my show that see this from all different angles, the increasing number of people that for years would never even think of putting a date on it, saying things like, I don't think this is going to make it another year. So again, we can get into how do you handle when you don't know the timing, because really the main way people can get themselves into trouble is needing it to happen by this date or that date, versus, you know, and I know your brother has a uranium company, and you hear Rick Rule talk about, well, we don't know when the price is going to go up, but if we want to keep using electricity as a society, the price is going to have to go up. And you have similar dynamics in silver, plus a lot of Wall Street leverage that, to me, has set the conditions firmly in place for the short squeeze of a lifetime.
So let's talk about this. I think currently, for people that aren't, let's say, silver bugs, or who follow the story closely, they can understand the story of government spending and that being the reason why silver and gold are going to remain strong. The element of the US election coming up, and the fact that it's immensely important to Trump's administration to have the economy, or a strong economy, to point to as part of their re-election campaign, could be another factor that, hey, you know what, they're going to do, you know, like the saying, by any means necessary to keep things going. We want to use this as a way to inform people on how they can profit from these sort of events. As an investor, what are some ways people can increase their exposure to silver? And you hear a lot of people talking about investing in junior miners, and you speak to a lot of CEOs. Who are some companies and some CEOs that you like, that you would consider that our viewers should add to their watch list?
Sure. There are a bunch, actually not that many pure silver companies out there. And I can get into some names in a second, although maybe it'd be helpful to explain the risk spectrum of the different products first.
Sure, yeah.
So the way I look at it is that if you're seeing the money printing and you're saying, I'm not trying to be a hedge fund genius, I'm just trying to protect, you know, my savings for me and my family. Perhaps if you're really new to this, then maybe you might want to go to gold, which has a little bit of the same profiles, just not as a silver. Just imagine gold on steroids. So maybe your grandmother doesn't want to take that type of volatility. So silver is already a bit volatile. Then you can get into the mining stocks. And then, of course, you can get into the junior miners. Obviously, there's a very different set of risks, because if you have silver bullion and you just throw it in your closet, you know, Wall Street will do what it does with the paper price between now and then. But unless you figure out how the Fed's ever going to unwind its balance sheet and the US is going to pay debt, you know, all right, maybe it's my kids who are cashing in. I don't think it will be that long. I'd be stunned if it goes on much longer, but it's still the silver, you know, as long as it's kept safely, you have something that with the way the money is being printed at some point is going to have to be revalued. Now, if you get into the mining stocks, obviously you're talking about companies. So if they don't find any silver, then it doesn't really matter what the price. Well, theoretically, because Arash, as I know you're aware from some of these previous booms, if you even have silver in the name, but they're making silver cars, you could see an environment where just everything is moving.
Well, it's more speculative, which is also why, as an investor, there's more profits to be gained on in trading in junior miners, right? Where opposed to, I think, buying physical silver, it's almost a totally different thesis.
Yeah. So put another way, let's say you knew a junior miner that was going to find a great deposit, and you knew silver was going to be back above $50. If you knew those two pieces, then yeah, silver miner you're going to make the most on, or a junior miner you'll make the most on. Obviously, the junior miner, there's a lot of risk. Maybe they find it, maybe they don't. So again, it's not the easiest thing to dig into on your own. I'm fortunate I have a lot of experts to learn from, and I'm still just amazed at how deep of a field it is. Now, on the other hand, in terms of some of the individual names you mentioned, these wouldn't be the junior miners, but First Majestic, a stock that everybody knows about. And certainly, if you think there's a big silver rally coming and you own shares of First Majestic, that's going to go pretty well. Maybe a rough way of looking at that is that, let's say silver is $15. It goes from 15 to 20, you've made 33% return, right? But if we imagine a miner, it costs them $14 to dig it out of the ground, their profit margin's $1, but when silver goes to 20, their profit margin went up 6x, right? So you'll get that leverage. And again, I appreciate you put a lot more sophistication to that than I do. But I mean, just in a way that people can understand it, you'll get that leverage. So especially some of these companies, if my thesis that eventually you're going to see a silver price above $50 turns out to be correct, you'll be stunned by what some of these companies do. And there's this slide it's page of Doug Casey's book, Crisis Investing from 1979, that I'll end this answer with. He talks about when silver doubled between 1962 and 1968, went from about $1.09 to $2.50. The average silver penny stock went up 150 times. Not 150%, 150 times. So if that's what happened when silver went from 1 to 2.5, so yes, if you have junior mining stocks and that happens during a big silver rally, that's the home run scenario. But there are some ways to diversify that. If somebody wanted a more conservative stock, you have a Silver Crest or a Mag Silver where there's identified big deposits. They know what they have. They can get it to production. There's not as much, especially Silver Crest is one that I like, because the thing in my mind that's the unknown is when. Now, let's say, who knows, maybe the paper scheme in the metal pricing unravels this year. That's one scenario. But let's say you have $15 silver for a couple more years. I don't personally think that's going to happen, but if you do, then someone like Silvercrest, who has a much lower cost of production, they're going to be in business, versus some of these companies, if you have $15 silver for 3 years from now, they won't be there. So it's really just, and it's going to be
By the way,
different.
Silvercrest had that massive financing. I think it was about a month ago now, about 75, 80 million oversubscribed. And it was one of the financings that we got the most inquiries on the website about this year, which I thought it was fascinating because there's so many financings we tracked. That one specifically got the most amount of inquiries from our users. So I think they have a massive following.
And it's not surprising. A lot of these companies are, it's like different people. Everyone has their own personality, but there are companies out there that are doing a good job. And especially I've been a big First Majestic fan, especially my background as an option trader. And there have been times where I love using First Majestic for a
Yeah.
rally because silver had a big move in the next month. First Majestic's probably going to blow away a lot of the other stocks. I mean, they'll all do well, but First Majestic.
Would you buy on the dip today? There was a slight dip.
I saw silver's down about 60 cents today. I'm hoping to do a little option shopping this afternoon before the close. Again, now even the options, I want to put a big disclaimer there. That's an extremely higher level of risk. So, but that's what's nice about, there's a downside to today's Wall Street markets, but the positive is that however you want to express a bet, whatever level of risk you want to put onto it, you can do. And I would say don't follow what me or Arash or anyone says to do, but find, you can take advice, but make sure at the end you're doing something that you feel comfortable with. Someone's, piling up on junior miners and then silver goes down $1 and they're getting heartburn because they're not sleeping at night. It's not really serving the purpose that investments, at least I aim for, where if you do your homework, to me, especially, I don't know, if I throw silver in the corner, if I have shares of some of these stocks that I feel comfortable about their balance sheet, that they can withstand the storm. The best part is that you can actually learn to be excited that the price is that low. Because anytime, like if you want to buy a new car and the guy says, well, it's 75% off today, people are thrilled. It's different investments because, yeah, we want to cash out. But again, you talk to people who have done really well at this for decades, like Rick Rule and other folks like that. And that's what I've found interesting in my conversations consistently. They say the best trades I made, the most money I made was when I found something that was out of line. Yeah. All right, if the thing's worth X and the price goes down, I'm happy to buy more. And that starts, it starts with having the confidence of your underlying position. For me, it's easy to feel confident in silver. I've studied it so much. It's going to be different for everyone. But again, if you understand your risks, you do your homework, and then you have your own confidence, you can ignore a lot of the silliness that's out there.
There's a lot of noise and a lot of silliness. Speaking of Rick, one of the interviews I did with him, we were talking afterwards, and you've seen Rick and his team, they offered this complimentary portfolio audit. Yes. for potential new clients of theirs. And so I asked him, when he looks at these portfolios, and he does look at a lot of them, people take him up on it, what's the most commonly held company or stock that he sees across all these portfolios? Without even thinking about it, he said First Majestic. I forget what the number was, but something crazy where he's like, Keith Neumeyer, the CEO of First Majestic, he's a great CEO, but also a fantastic marketer, not just for the company, but for silver, the commodity.
I couldn't agree more. And in fact, the big silver short book that I did, there was only one mining company that was in there, and that was First Majestic. And I spoke with Keith Neumeyer. And part of, again, after a decade on Wall Street and seeing just the different things that go on there, these days I spend less time looking even at the numbers. I'm not saying is what anybody else should do, but it's like, show me the guys running the company. And if he resonates and seems like he's seeing the same universe as I am. So to me, that Keith recognized why a lot of the companies, I think they're great at mining, but if it's like they're not seeing why the price is low, that was something as an investor that I valued.
Yeah.
So not that necessarily you can implement that or say we're never going to sell our product, but I remember always thinking, well, at least the guy's aware of it, so that we all make thousands of decisions per day, and maybe just over time that stuff adds up. And you saw even last week, it was interesting, Keith announced that First Majestic was going to start withholding some of their production because they know what's going on in these paper markets. And I admire Keith for speaking up about it. I know it's not, from his vantage point, an easy or popular thing to say often, but that's, if I could pass along a tip, don't it doesn't matter what the guy looks like or if he talks funny or not Keith, but anyone in general, but listen to what they say. And, Keith, he says things that can match up, and here it's now, that's something that I felt more comfortable with. All right. And there's an example of them implementing that. So, again, people just find the risk that things that resonate and fit, you don't have to be in any particular stock. And in fact, feeling okay to pass is a good way to keep a lot of your money.
That's a very good point. I think what you said about sometimes ignoring, not ignoring, but paying more attention to the people that are running the companies. I know it's one thing that both you and I have the luxury of seeing a lot of these CEOs by attending the conferences and the events. A lot of investors don't have that sort of access, which is why I think it's great when you hear them speak in interviews and you can really sense their level of understanding and commitment to their business and to the sector. Sometimes with these sort of different type of metals, because they're cyclical, it's hard. You got to be committed because you might go through down cycles where it might take, for uranium, a decade to recover. But I think I believe I agree with you on that. I think just understanding the people and getting to know the people, if you can at conferences directly, if not through these sort of interviews and podcasts, is very important when making your investment decisions.
Yeah, and if I could just add one twist on what you said there, you said that, we're fortunate, and certainly we are, although that's one of the things I think is great about this mining sector, where people can get access to these guys. A lot of the folks I talk with, probably a lot of the same ones you do, and when I bring these mining CEOs on, there's a phone number and you can get information, you can get access. And fortunately, there are folks that you're bringing these guys on and talking to them, so that the information is there. And I would say, especially for people who like the ability to say, hey, if I go do my research and think clearly, Facebook or Tesla, you're probably not getting access to the CEOs, and maybe there's more wide dissemination of information. Yet it hit me it finally all clicked one morning when I was at a breakfast for EMX Royalties. That's another company that I like that people could take a further look into. And it hit me. I'm like, geez, the numbers are probably already incredible, let alone if you have a rally in the metals. Yet if I hadn't met these guys at some of the shows I've gone to, or, from people like you that I network with, I wouldn't have known about it. So there are companies out there that are great. There are companies out there that aren't so great. So again, that's why, you have the service you offer. There's good newsletter writers. It's out there. And for those people who really want to not feel like it's some rigged Wall Street game, but if they understand what's going on, they can do well, I think it's a great place for that.
I totally agree with you. And I think with what you do with the show and the book coming out, very excited about that. Do you have a release date for the book that you can share with us?
Well, the audio version is currently available. You can find that at arcadiaeconomics.com. God willing, I will be getting the print version finally out of my hands and over to the printer, hopefully by tomorrow. So I would like to think a week or so. It's interesting, rather than the traditional way you might have done a marketing campaign. To me, I've been rushing to get it as quickly as possible because I think a lot of these things that the book is about are coming to a head in the markets now. So hopefully the print version in about a week. Thanks again for mentioning that. I think people are really enjoying what they've heard so far. And maybe the last thing I'll leave with, I don't think this has to be a time where people have to be fearful or scared. I wonder if that's another government engineered product, but instead, when you go and take information, take accountability for what we're doing in our own lives and say, all right, it's not how I'd run an economy, but right, the Fed's going to print. What do I do? And, certainly the metals, the mining stocks, and certainly on the silver side, I think we're going to look back at some incredible opportunities before it's all said and done. So it'll be fun.
Listen, I totally agree with you. And like our good friend, mutual friend, Jim Peterson said, you have time to figure out your strategy right now. And this is a big opportunity that we're experiencing. And also your timing with the book is spectacular. We look forward to that. Chris, thanks for joining me. I look forward to speaking with you again.
Thanks so much for having me. And hopefully I'll see you up there in Vancouver sooner than later.
I look forward to that. Thanks, Chris.